Jan, it's hard to look at these numbers and look at what we saw on Wednesday with the ADP and not see a big contrast here. So what do you think is going on in the underlying unemployment picture?
I think in general things are picking up somewhat. I would put a little bit more weight on the Labor Department numbers than on the ADP numbers. I mean, I think the ADP numbers are an input into the forecasts, and they did point to something weaker, but generally you only want to pass, a relatively limited part of any ADP surprises into the employment estimates. But this is a relatively large gap, you're right. But I think if I look not only at those numbers, but also at claims, at least some of the surveys, it does seem that there's some pickup. Non-manufacturing ISM showed a stronger employment number as well. So I do think the idea that we had a weaker period and now are seeing some signs of acceleration is right. So
you were looking at factors like weather, the late Thanksgiving holiday as potentially putting some pressure on today's numbers. That didn't come to pass from your reading the report? I think it possibly did come to pass. If you look at some of the details, retail was a little bit softer, construction was a little bit softer. So what it says to me is that actually, if anything, these numbers are being held down by some special factors, underscoring really the strength of the report.
We were talking during the break about seasonality and the way in which, what period is artificially weak until we get revisions?
Well, we have seen repeatedly August, September numbers on the soft side, and then October, November somewhat stronger. So some portion of what we've seen over the last several months may be related to seasonal adjustment issues. But again, if you look more broadly at the claims numbers and the survey numbers, as well as the payroll numbers, I do think there's some acceleration. But you never want to take any one number at face value because these figures just fluctuate for various reasons.
You write no significant implications from monetary policy, even with the wage number?
Well, I think relative to our expectations that, and what the Fed has said, frankly, that they're pretty firmly on hold for the time being, this underscores that they're on hold. The wage numbers were a little bit mixed, I think. You look at the front month-to-month number came in a little bit below expectations, but there were some upward revisions. And also, if you look at production and non-supervisory workers, we've seen a pretty sizable acceleration, which has actually continued in 2019. So overall, I would say there's some strength in the wage numbers, even though this number came a little light.
What do you make of some of the labor market slack right now? How much of today's numbers involve, pulling forward some of those seasonally adjusted things that you were talking about? And how much of it are things that, maybe kind of one-offs, like the GM workers coming back?
Well, I do think GM had a clear impact, boosted these numbers by 44,000 today. So you always want to take those identifiable one-offs out. More broadly on labor market slack, we've seen continued increases in the employment to population ratio, not in this particular month, but the trend's been still higher. The unemployment trend is lower, and so I think we're seeing clearly a tightening of the labor market that is showing up in the wage numbers, and labor market is very tight.
What's your expectation with regard to Sunday's tariff deadline? We heard some comments earlier from Kudlow saying that he believes that the talks are intense, but they are progressing. I mean, is that something that you're factoring in with regard to expectations on GDP?
December 15th, I think, is still a risk. Our baseline is that there will be a phase one deal that will involve not imposing those tariffs, and in fact, to some degree, rolling back some of the tariffs that have already been implemented. That seems to be what China is demanding, effectively, as the price for a phase one deal. We think it probably comes together, but there are surprises that are definitely possible. We've seen it before, so I think you still have to figure some downside risk relative to that assumption.
A year ago, we had fairly similar jobs numbers or data, but we had a 10-year, I think, that was at about 2.8. Here we are 100 basis points or so below that. I mean, are rates too low given the strength of the economy?
Well, I think a bit, yes. Our expectation is that we'll see an upward drift, even though the Fed's probably out of the game for a pretty long time to come. We have nothing in 2020 on that front. Nevertheless, as the economy still grows at a somewhat above trend pace in 2020, and we're a bit above the consensus as far as 2020 growth is concerned, I think at the longer end of the curve, we will see some upward pressure. So we're at 2.25% by the end of next year. It's not a dramatic sell-off, but we are almost 50 basis points or 40 basis points higher than what we're currently trading.
Finally, do you find the disparity between November jobs report here and in Canada, do you find that interesting?
I thought it was pretty interesting. I mean, the Canada report is a household survey, so it is more noisy than the U.S. numbers, at least the U.S. payroll numbers. But it's a relatively sharp contrast. It used to be that Canada reported at 7 a.m.
Yes.
and the U.S. At 8:30. So in the old days, when that was the case, that would have really scared people about the U.S. report. But now, obviously, these are simultaneous.